Greetings, this is Dr. Jeffrey Scott. This is my Market MRI Pro update for a crazy day, Wednesday, April 9th, 2025. Well, I couldn't help myself. Making markets great again, MMGA. Well, that was definitely what we saw today. Trump pauses tariffs, markets explode higher. Um, you know, when we did the video late on Tuesday night, we looked at the potential hammers forming and really solidifying a bottom, I thought, at the Monday lows. But it still was a tough market. It was down for a lot of the morning, bouncing around. And then, boom, we got what everybody, well, especially I predicted. I just thought it was going to come Sunday. Pausing tariffs for 90 days, except for China. Markets seem to be okay. And after hours, we heard that China wants to talk. So futures are up, nothing like what they were during the day, but suggests that if they hold, we might have another positive day. But wait, we still got a lot of things to happen between now and then. So let's talk about what we saw in the market on Wednesday. Again, my name is Jeffrey Scott, and my email addresses are marketmripro@gmail.com and htsIdoc@gmail.com. If you're new, hit the subscribe, hit the alarm. You get notified when I put these up. If you really want to get notifications, I'll talk about my Google group. If you like what I'm doing, give me a thumbs up. I mean, I don't get any help from YouTube. I got a small group of people that follow me. I've been doing this for over 20 years, and I don't market, don't keep a mailing list, so I guess I shouldn't be surprised. But I hope you like what you get here. We'll even talk about stocks today, which I didn't want to do the last couple of days for obvious reasons. As always, this is for educational purposes only. Anything we talk about should be considered in the spirit of education and not investment advice. The intent of this and all my videos is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may intend to buy, sell, long, short, options, any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors before making trades. And I'm going to use Market MRI Pro tonight, which is my own proprietary tool, which I put into the market about a month ago, and wanted to get enough people using it so I could break the servers, and we did! Got more servers now, feeling better about that, and we're going to take it to a larger audience and probably do a formal launch in the next couple of weeks. If you like these videos, come to the live meeting. I'll be there live. I promise to entertain you. June 6th, 7th, and 8th. I think I told somebody today 7, 8, 9, but 6, 7, and 8 at the Residence Inn and Suites in Tustin, Orange County, California. If you're interested, reach out to Greg Mills, GAM72054 at AOL.com. Typically have 4 to 6 speakers. I've now invited Chris White from EdgeRater. He speaks almost every year via Zoom from England. Haven't heard back from him, but I would be surprised if he's unable to attend. It would mean he's got something big going on otherwise. John Person has indicated that barring last-minute cruises or something else that pops up, he will be presenting. And if you've never heard John speak, you need to listen to him. He's really a great trader. He manages, I don't know if it's 8 figures, but it's millions of dollars of money. And he will be the first additional educator that puts their tools into the platform. Still working on what the business model will be, whether he has his own version of the platform that he sells, or if he comes in as an add-on to the existing version. And we'll know that more about that over the next couple of weeks. So excited to have his tools there because, hey, I use a number of people's tools in addition to mine, and he's one of them. So having him in the program is going to be awesome. I mentioned my Google group, Top Down Trader. How do you join? You go to Google Groups, just put it into the search line, put in your ID, search for Top Down Trader, sign up, figure out how you want to be notified. There's no charge. There will never be a charge. I don't solicit you. I will let you know when I have something going on, whether it's one of my marathon teaching seminars for about 3 hours on a Saturday or give you discounts when I relaunch the product. Love to have you there. The group's growing. And, I'm just going to go back to this and show you what the last couple of days really have looked like. And this isn't current, this is 2008. And you could see when most of the stocks were below the midline of their Bollinger Bands, and most of the stocks were actually 80% or so last night when we looked were below the bands. I showed you a number of things that I look at for stretch markets, and I said we were going to bounce. I called Monday's bottom. Monday night I called that Monday was a bottom. So far that's holding. Now I will remind you that 2008, these charts were made in October, and I don't think we bottomed until a month or so later. So we can still go lower, and I'm going to show you something you've never seen today, and it's a pretty good signal as well. Know your news and earnings dates, and oh, by the way, Thursday is CPI day. Now, a hot CPI will probably be ignored because, well, that was before the tariffs came in. Won't be ignored, but probably less impactful than it could have been. A low CPI is going to freak the market, but since the tariffs are better, maybe it won't matter. So maybe it doesn't matter. I hardly would ever believe a CPI doesn't matter. The odds of a rate cut, if you look at some of the tools from people's predictions, have gone up for June. So the CPI does matter. And then PPI on Friday and a bunch more Fed heads. Earnings on Thursday, CarMax, Lovesac. And Friday is really when we get some interesting bank earnings. So it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. On to the charts. So I am a swing trader, but I probably am more of the swing to position trader, meaning I would rather put on a trade and watch it work for me for a while than go in and out in days or a week or two. Now, in long trending markets, that works really well. In fact, someone said at Wealth 365 today, a young woman that was teaching, that day trading is hard. It's really hard. Now, my type of trading is not easy, but I have a life. I run a company with 3,500 employees. I work every day in my office. Of course, I've got 6 monitors, and my partner likes to kid with me. But I don't trade much during the day. I do monitor the market. I may make some adjustments, but most of what I do at night on these videos. See if there's anything I want to put a trade in. I set my parameters for that trade, and typically that would mean what's my stop loss, what's my buy stop if I'm going long, and what is it? Is it stock? Is it options? And I'll put a couple of trades in tonight, most likely before I go to bed. All I've done the last couple of days, I mentioned it, is I bought some TQQQ because I thought we had a bounce. I might as well get some high octane run out of that. But other than that, I've been watching, and I have long-term portfolios that I try not to pay attention to, even when the market's selling off. I may put on some protection, and they were up massive with the day, and they're not that far off where I started the month. But my short-term portfolio, mostly to cash, because in markets like this, you just don't know what to expect. So what do we see in the markets, U.S. markets, on April 9th? You have one-day close change. When's the last time you saw a 12% move on the Qs? I think it was 2008. 2008 was in the midst of a bear market. So don't fool yourself. This was a massively strong day, but the strongest days in my experience occur in bear markets with dead cat bounces, bear market rallies, etc. So that does not mean we're out of the woods yet. And no, it was not a follow-through day, to be discussed in a few minutes. Spider was up 10.5, Russell 8.5, Diamond 7.86, and as you'd expect, volatility was down 20%. The major U.S. markets all closed at the very top of their daily range. That's bullish. Interestingly, we did not flip the new high, new lows on either the NYSE or NASDAQ, so that probably takes a little bit longer to see that. But if we're going into a bull market, or we're resuming a bull market, and we're going to take out the new highs, it's going to be built on new highs, not new lows. Right now it's mostly new lows. My little tool that was adopted from Sagar's Q Edge, but expanding beyond the S&P 1500, looking at the NASDAQ and the NYSE, all the sectors were up, almost all the industry groups were up. And on the S&P 1500, I cannot remember when I saw 99% of the stocks up. On the NASDAQ, most sectors were up, and the whitish gray shows you the big improvement from a day ago. So 84% of sectors, 95% of industry groups, 86% of stocks. On the NYSE, 100 on sectors, 100% on the industry groups, 95% of stocks. And all I can say is, wow, that is such a bullish day. It just doesn't feel like it's sustainable, does it? And the natural thing is, I guess, strength begets strength. We're probably going higher, and we're going to try and handicap where we think it's going when we start to look at the charts. Could this be the end of the downturn? Sure. Do I think it is? No, and more of that to follow. Tech was up 13.9 in the S&P 500. Discretionary was up 11. Industrials were up 10. Everything was up. The laggards were what you'd expect to lag. 4 on the staples, up 4.8 on utilities, healthcare 6.6, and real estate up 7.54. Can you imagine a day where up 4.4% is considered a laggard? Wow. And if you look at what themes were working, 17% up on semis, Internet of Things 14%, blockchain 12%, artificial intelligence 12%, for some reason, robots 12%, fintech 12%. What a day. What a day for the bulls. Now, let's look at the buckets, and you could see the gray bar tells me where I were yesterday. So look at this. A day ago, 76% of the stocks in the NYSE were below their Bollinger Bands, and tonight it's 5. On the S&P 1500, it went from 83 to 2. On, wow, that's amazing. On the NASDAQ, it went from 55 to 8. And on the Russell 2000, it went from 73 to 5. That is such a massive move. To me, that means something. I can't remember a move like that. So definitely a improvement. Probably still a little oversold, believe it or not. But we're better, much better than we were. If I didn't say it 12 times already, let me say it again. Wow. MMGA, making markets great again. Market breadth. Look at the massive move. Sorry about that. On the left on the NYSE, on the right on the NASDAQ. Interesting, we're about to get a death cross. And it turns out after the death cross occurs, markets usually go up. So maybe that's not such a bad thing. If we look down here, we can see we did not have greater volume on the NYSE today. We did on the NASDAQ. So you might ask yourself, Jeff, why aren't you saying this is a IBD type follow through day, which means I should buy? And it's simple. The first day of attempted rally was on Monday. Day 2 of the rally was Tuesday. Day 3 of the rally attempt was Wednesday. How do you define a follow-through day? Starting on day 4, after an attempt to rally, you look for the major index at S&P 500 or the NASDAQ typically to be up over 1% with more volume than the prior day. It's only day 3. It can't be a follow-through day. If we look at stocks below the 200 in red, 50 in white, and 17 in green, you can see they've turned up from very oversold areas. As we already talked about, the new high, new lows did not flip. You can look here for today's scores. Advanced decliners, very positive. Has to be. 90-some% of the stocks were up. And the up-down volume, very positive. Now, what else was interesting today? You're going to see something you haven't seen in a long time. In fact, You've never seen one because we invented it a month or 2 months ago, 3 months ago. And let me say that different. Praveen invented it. We all know the Hindenburg omen. It's one of my favorite things. It's something that tells me to stiffen my back and be worried about a correction in the market. So I asked Praveen, or Praveen came back to me and said, I found the Hindenburg to the upside. And he showed it to me, and we'll share more of the ingredients at the Orange County meeting. And I said, let's take a look at our charts. So this green arrow is the defibrillator. When do you use a defibrillator? On a dead person or a person who could be dead. That isn't. You bring him back to life. Well, let's see the last time we saw the defibrillator. Now, it may not be the low because you can get them a couple days in a row, but it tells you that if you're not at the low, you're getting very close. And you see how often it fires. Not. A year ago, it hadn't fired. All right. And it shows you when you're at a major low. Da, 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 da. Keep going. Keep going. Nope. Nope. It's coming. I promise you. And there it is. We saw one right here. And similarly to 2008, perhaps, it was after a big fall in the market. It was an attempt at a rally here. Okay. And it told us it was okay to think about buying, or that a bottom was in. It's probably a better thing to say. We actually pulled back the next 2 days, ran up higher, and then we had another one occur, another rally day here. Um, did it fail? It failed. But really, it got back to where the first signal started, and that was the bottom. All right. Let's keep going. It does not fire very often is, I think, the point. And so when I see it, I find it to be very interesting. And it's always going to come in after that rally attempted day. Up, there we go. We got one down here. So this is when the market has started going back up. Here was the original one. Here's the bottom. I had the defib the day after the bottom after a big pullback. That was March 20th. So I think it's an interesting signal. I'm going to study it more and look at more of what we see. We also saw a Eureka, which was Ian's version of a follow-through day. It's not an official follow-through day. Okay, it doesn't meet the criteria that we're looking for, but it is something that is a positive. So this is good. Good stuff. All right, ratio charts. Well, you know what you're going to see. This is a data error, so we're not going to talk about that. But healthcare defensive down, staples defensive down, utilities down, and real estate down. But Jeff, how can they be down? You said everything's up. Trump made markets great again today. Well, that's because it's a relative basis. It's compared to the performance of the spider. So what outperformed the spider today? Discretionary, industrials, definitely technology, energy. Those are the ones, and even Bitcoin outperformed the spiders. If we go and we look at, yes, it says futures there. You don't have it yet in the tool. We're going to have a real-time feed up. Just not sure how many time points I'm going to give you. We're working through that right now. So yes, if you own the product, you'll be seeing that sooner than later. If we go into the timing model, let's go into go to the timing model here. This is daily, and I just wanted to show you that two things have to occur for the daily to flip to a buy. And want to talk exciting? We could cross that WMA tomorrow. The bongo's already crossed. We could cross and close above the WMA again tomorrow. The bongo has crossed, so we haven't totally flipped, got closed above, but close above it. Both of these will go to a buy. This one's within striking range. The bongo's already turned to blue. The Russell's got work to do. So another positive day in the market on Thursday could turn us to 3 buys on the daily. Does that mean it's all in? No. And I'm going to show you why. But I started nibbling, and I'll start nibbling again a little bit at a time. Like I said, I started with some leverage ETFs because there are not a lot of things I had to buy to get a lot of exposure. If you look at the weeklies, they're going to stay in a sell. Still got to get back above the 30-period WMA before that would change. So the natural progression here is for the market to start going higher. Check. Let's get a follow through day. Check. Let's have the dailies turn green. Check. And with each of these checks, I will deploy more of my cash into the market. And then if we stay moving up, ultimately the weeklies will change and I'll go to a bullish stance. My base case here is we're going to fail. Let me show you my concern. US ETFs. So I drew this trend line before I did the video. There is definitely a falling trend line here. So we've got the 17-day, which will probably blow right through. We're going to have this trend line, which is, all right, if we run into that trend line and fail, all we have here is a massive retracement in a downtrend. So we can still go lower. So one thing that I'm probably going to do is I had some options left that I didn't close out, which I should have closed out, which I'll probably close out because they got some profits in them tomorrow. Mostly in cash, a few little things sitting around in various accounts. But why? Because I'm concerned that this is going to be one of these. And again, I don't have a crystal ball. Nobody does. But I've been doing this long enough to know that it doesn't work on this one, I think. Yeah, never mind. I have to do it in a different window. I expect failure here and a turn down. But who cares what I expect? The next area of resistance is going to be in here. If we get through this, we're going to worry about failing here. If we get through this, I'm going to become a believer, and we could run all the way up here, but then we're going to have to worry about this here, which was a double, triple top. But it is not impossible for us to break above the 200, break above this area here, and go higher. I still think there's a high chance of failure. So therefore, I'm still going to be careful. Like I said, stepwise. Get me my follow through day. Break above that trend line. Break above the 250 area. And each of those steps maybe commit more of my hard-earned short-term money into the market. If I look at the Qs, does it look any different? Massive move. Massive move on more volume, but it's too early to be a follow through day. Right up to the 17. And you know what? One could have definitely, and I thought I did, I don't know what happened to my line. Well, one could definitely have that same trend line on the Qs. I had drawn it. Don't know why it's not there anymore. That is bizarre because I drew the same trend line on the Qs and on the diamonds. And I think that to me is the short-term risk. I don't know what I did wrong to kill that. But, oh well. You can get the sense that we're going to have the same story there. The Russell as well. You can see the VIX had a big one-day reversal. When the VIX is high, it's time to buy. When the VIX is low, look out below. I would say the VIX is still what I would consider high, which means probably still a buying opportunity. But again, think about where we're at. Do you really think this is going to resolve in 2 days? We may have made markets great again today, MMGA, but I'm not sure that's sustainable. You look at dollar, you can see the dollar open lower and close a little bit higher in the market. If we look at commodities, pop on gold, pop on silver, big bullish engulfing pattern on oil. If we get through Wednesday and Thursday, this might be a really interesting spot to be taking a position in oil. Let's get you some more data. We really broke down, and bring it in again. We're in this area here. Again, it might be a good time to look, but I'm still, like I said, I'm not convinced yet. Natural gas, let's go change this to year to date. Also had a nice candle, also looks kind of bullish engulfing as well. Big breakout on the 10-year and the 30-year, but they closed low off their highs. So this was a pretty much everything up day in the market. So what are we going to do with stocks? Let's go into the JAS layout. And just for those that own the program, a couple of different things. Um, we are going to add a group called commodities, and the commodities is where you're going to find the futures. We're setting up a couple of our servers to do real time for those that want to do it or go near real time. And we're just trying to figure out what the frequency we want the data to come out at. We have real time data. We don't typically stream it because for people that trade like me, it's good to know the data right now, but most of the time we're not looking at the charts. Up, hold on, interruption from number one grandchild. Sorry about that. After you deal with having children, God rewards you with grandkids, and they are the best. All right, so what I wanted to tell everybody else, we still have an issue here. Our data provider stuck this information technology, which is two cheap stocks, and it stuck this industrials, which is one cheap stock. It put marine shipping, which is one cheap stock. And I don't know no idea why they ended up on the sectors. I showed that to Praveen last night. He's going to not fix the code, but he can take them out, addressing it through the code side. But basically, if we look at from a top-down perspective, we know everything was hot in the market. Ignore this one, and you can get a sense that technology really led the market higher. If we look at tech and we take a look at the different industries in tech, number one was semis, consumer electronics, and computer hardware. And it's put all the double-digit ones up here. These were some of the hottest things in the market. They have 341 stocks. Now, as a top-down trader, I think the market's likely to go up, although I have my caveats. The strongest group was technology. These are a sector. These are the strongest groups. Therefore, these are the stocks I want to look at. I could rank them by performance in the market on Wednesday. I could start going down the list. Looks like an IPO. Who would have brought an IPO out in this? Well, that's a daily. But let's look at the weekly. Nice move, but not my cup of tea yet. AAOI. This is what you're going to see. Big sell-offs with the rebound. AEHR, I'm looking to see if anything has gotten above the 200, form factor, site, AOSL, digital turbine. These are the ones that had the big moves. Notice something. They're all really beat up. I am not a bottom fisher by nature. So I'm just looking to see if there's anything here. All right, that's probably the first one that looks interesting to me. This is MicroStrategy. MicroStrategy is a play on Bitcoin. Bitcoin outperformed in the markets today. You've got that trend line there. Probably could argue something from here through that. So I think that this looks interesting to me. Let me tell you why. High-low jump is 4.79. It's not extended. Well, I know that. Its relative strength rank is high, 95%, which is interesting, but I guess it's looking at the short term. It is in an uptrend with a pullback to the 200. A move up will take out the 50. It had good volume. The first blue dot is a CPR. That's an individual trading system. This dot here is big volume today. You could see that, and this is momentum. Relative strength has not necessarily crossed over yet, but it's getting close, as is OBV. What I would want to see here for me to buy this thing, I'd like to see it break out above this. So I'm willing to give up a little bit from where we are right now instead of buying it at the open because I still think there's a good chance it fails. But MicroStrategy might be one that I might want to throw into one of my lists. All right, ARM. What happened here? I I shouldn't have switched off. So let's just do this again. Doing, 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 doing. These are all the ones with double digit moves. Okay. Rank the right way. Let's go back to ARM. Too far down. IonQ. I think this must be one of those quantum computer plays. It was running before the market sold off. Again, similar to the MicroStrategy, it's low in its place. Um, you could start playing with trend lines, and I am definitely a trend line guy. And you sort of broke out of that trend line in the market on Wednesday. You did it with a bunch of dots, with the CPR, volume, breakout, momentum, relative strength crossed over, OBV is getting close. I might put Ion Q into my watch list. Keep going down. AMD had a huge move in the market. Does it have a setup? I don't like buying things off the bottom. Sometimes it's the right time. They're also fraught for failure. Robinhood, similar to the three that the MicroStrategy and the IONQ, is starting to move up. So for the first time in a long time, we're starting to see stocks that are getting close to being interesting. Impinji, not yet. I'm just going to go real quickly and see if anything looks interesting to me. Again, this is the leading industry group in the markets on Wednesday, leading sector, and the 1, 2, 3, 4, 5, 6, 7 of the leading industry groups. I'm not going to find anything more. Another thing I could do is just look at all the industry groups, and let's just take the ones that were the best. Manufacturing textiles, I'm afraid that's going to be something I don't want to see. Semis we already looked at. IT systems is that little one. These are things that are not classified. Oil, gas, and drilling, asset management, chemicals, 1, 2, 3, 4, 5, 6. Electronics, 7, 8. So these are the top 10, 169 stocks. Let's do the same thing. See if we find any more that look interesting. Capri Holdings, no. Maybe, but not yet. Nope. AEHR, nope. 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 Not for my taste. I'm looking for things that have had enough move that I trust that this isn't just a one-day bounce. And again, looking at the top industry groups in the market, we're seeing a similar pattern, which is things that have been beaten up that had big one-day moves, which may be the bottom, but they haven't taken back their 200 or any of the other moving averages that I care about. And these may be great times to buy these stocks. It's just not the type of stocks I like to buy high to go higher. And obviously, after the market fall that we've seen, may not be a lot, but I'll show you some. All right, so not a whole lot's coming up to the top. To me, that's top-down analysis, and it's one of the best ways of doing it. HGSI is another great way of doing it, and those are probably my two favorite from a top-down analysis. Lots of other good tools, TC2000, VectorVest, Wealth Charts can do it as well. Let's go into the bottoms-up approach. So I have, what happened? The markets, because the markets were higher in price today, we had more stocks with a price above $1 and over 100,000 shares, or over 37, 31 instruments. That's I won't even scan things that are below that. I won't buy less than $5 and 500,000 shares. So let's just go in first. And let's set the volume as over 500 and price is greater than $5. Now we're dealing with 2,287 stocks. Now, if I ask the question, how many are above their 200? After what we just saw, it won't be many. 613. So let's just look at some of these to start. And let's rank these by two-day momentum and see if anything looks good. There's some great names there. Booking Holdings. This thing is a great leader, a bullish engulfing pattern, really what I would call a belt hold candle at the 200, a CPR, volume, and momentum. You could argue there's a trend line here, a trend line here that hasn't broken yet, not extended. Up here I can see earnings. Next earnings date is April 29th, so I got 3 weeks. great surprises on earnings and revenue. The markets like surprises to the upside. On the news perspective, I guess that's an interesting why it did open dip more than the broad market. What was that about? Let's see what it says. You actually bring the news story. No time to read it. Just the point is you can actually find the news stories. What do we got? Meli, M-E-L-I. This is another historically strong stock. Come on. Here it is. Kind of going sideways. Break above the 50 could be interesting. ISRG. This is another one with a major bullish engulfing pattern taking out the 200. This is another one that I like. So here are, it's got a CPR, a volume, a breakout momentum coming out of a squeeze with relative strength at OBV. I mean, this is getting your shopping list ready, but trying to not have FOMO. And the reason you don't want to have FOMO is we still could fail in this rally. You got to be very careful. Meta, big move, took out the 200. Netflix, a lot of interesting looking stocks here. There's that MicroStrategy, CrowdStrike coming back, Costco. Never understand the valuation of it, but it's hard to argue what a great move off of the 200 and big candle there. So a lot of positive movement there. So that found us a couple stocks. Let's narrowing it further. Let's put in some of my signals. One of my favorite signals is 2 days momentum up. Don't know if we'll see any. We got 3. Now Vero gapped up in the morning. It's a biotech specialty pharmacy play. You could see massive volume. It had gap volume, breakup momentum coming out of a squeeze. PSAR reversal, great volume. I've never heard of it. It ran from 3 to 10 and then ran all the way up to 14. What was the news? Registered direct offering. They raised cash. That's not reason to buy something, in my opinion. You might want to watch it. It's got a tendency of spiking and coming down. This one did interest me, CVS, and I think I talked about it yesterday as well, about how the government raised the Medicare Advantage rates, and you may wonder, what does that have to do with CVS? They own Aetna, and I think they have a fairly decent book of Medicare Advantage lives, and this is typically something that could cause it to go higher. Certainly, if you look at this in a weekly perspective, you could see it. Let's go to monthly. Why are we not getting more? There you go. This has been a beaten up name, whether you look at daily or weekly. And is it ready to run? Going to have a lot of people saying, if it only gets this level, I want to sell it. But I think CVS doesn't look horrible. Playa is a takeout, so we don't care about that. Another one of my favorite signals is, how about daily and a weekly CPR signal? So you already got to be in an uptrend on the weekly, and you had a trend reversal in the markets on Wednesday on the short term. So let's just look by 2-day momentum. I like that as a scanning function. Let's just go down. There's intuitive surgical again. Let me show you what I'm talking about. There is my CPR buy signal right below the red dots. That is on a daily. It means the last one to fire on the weekly had to also be blue, and it fired on the weekly as well. That tells me we're entering a new uptrend on both time frames, and I like ISRG, MicroStrategy, CrowdStrike, Axon. This is an old name, the old Taser, and they had a massive move in the market, lots of blue dots as well. Carvana, I just don't understand this company. A lot of related company transactions, but some negative reports from short sellers. It just worries me a little bit. GEV, this is one that I ran after this move, had a nice blow off top. It's trying to run again, and it's probably getting close to breaking out. Expensive stock, they're going to show benefits if we have data centers expansion. So just looking down the list, Palantir is another great one. And this one had a huge move, but if you believe their story, and obviously a lot of people do, because this thing is marked up so much compared to its fundamental value, it's time to buy it again. It took out the 50. You had CPR, volume, breakout, momentum. You have relative strength turning up in OBV. I think Palantir looks good. And one other one that I saw, and I'm gone on for way too long with my entertaining presentation or boring presentation, depending on your perspective, is this has been one of my favorite gold stocks. I think gold still can go higher, and this is a cheap gold stock breaking out to all-time highs. So on that note, hey, thanks everybody for watching. Again, hit the subscribe, hit the alarm, hit that up thumb. Maybe YouTube will show it to somebody. And join my top-down trader group. Have a great day in the market. And just I can't leave without reminding us on this slide. This was an awesome day. We are likely to trade up to that. That is going to be resistance. If we break through that, then we worry about up here. So each of those are obvious points for a reversal. You don't expect two bars that look like this in a row, but who would have expected this much of a drop in 2 days either? So resistance coming up. It's make markets great again, and have a good night.